everyone. Welcome to the 8th Learn Livestream session. I'm your host for today. I'm Sabrina. And while the crypto market is currently showing strong signs of recovery, we all know that volatility is not a stranger to this space. Today, we're going to explore how you should react and what strategies you might consider if another dip is on the horizon. Whether you're new to crypto or a seasoned trader, understanding how to navigate these fluctuations is crucial for not just surviving, but thriving in the world of crypto. This live stream is available on both the Bybit app and Bybit web, but as usual, for the best interactive experience, do join us on Bybit web where you can interact with our experts and ask all of your burning questions. Now, before I introduce our panelists, just a quick question. Who loves free stuff? Because if you do, it's your lucky day. We have an ongoing pop quiz that you can answer and win 100% APR boosters. Now, this is just like the previous rounds where it's limited to the first 100 winners. So what are you waiting for? It's just answer the questions. It's that simple. All right, and of course, please don't forget to like this video and share this stream out so that more people can join in on the fun today. Now let's meet our esteemed panelists who will help unpack the recent market movements and provide clarity on what this means for traders and investors. We also have a special guest star joining us today, and he's Michael, the founder and CTO of AutoTrading. Hello, Michael. It's good to see you. Please give us a short introduction about yourself and what you do.
Hey Sabrina, thank you for the nice introduction. Thanks for having me. I'm Michael. I'm an engineer. You might know me also from DAP Radar. I was VP of engineering there. But then afterwards, I started my own business. It's called AutoTrading, and I help retail investors understand how to automate for the long term their crypto portfolios.
Thanks, Michael. Excited to hear more about what you do later on. All right, next up, we have Jerry, the Earn Product Manager at Bybit. Hey, Jerry, thanks for joining us.
Hey, Sabrina. Hey, Michael. Jerry here. Very nice to be here. Very excited to talk about the recent market trend, potential strategies, that can help traders, from different angles. Yeah, thanks for having me.
Thanks, Jerry. And lastly, we have Ether, financial product expert at Bybit. Hi, Ether.
Hey, Sabrina, Michael. Yeah, hi, Jerry. Hi, guys. Really exciting to talk to you guys soon, and we are glad to share like our latest observation about the market and discuss with Michael and Jerry like how are we going to move in such market.
All right. Thanks, Ether. A warm welcome to the three of you, and thanks for joining us today. For those of you who have just tuned in to our live stream, we do have a pop quiz that you can answer to win 100% APR boosters. Do note that this is limited to the first 100 winners, so fastest fingers first. Now let's dive into our first segment on understanding the current crypto market conditions. The crypto market is known for its volatility, but with recent signs of recovery, it's important to gain a clear perspective on what's driving these changes and how they compare to past market behaviors. In this discussion, we'll dive into factors currently influencing the market and explore how these dynamics align with historical trends. This knowledge is essential for any investor aiming to make informed decisions in a market that's regaining its footing. So let's begin by unpacking the basics. So can someone just start by explaining what characterizes a market correction versus a full-blown bear market? Maybe Michael, would you like to share?
Of course, I can talk about this all day, but I also would love to hear the opinion of the others. I think that in crypto, it's relatively straightforward. Maybe so. Don't take this for all the markets, right? For crypto, I think it is quite easy to just simply use the simple moving 200 moving average and see if the price is below that. But don't just because it's dipping one day below that, it doesn't mean immediately that this is already the bear market. But if it's below that, breaking also critical support, I can show that later on the chart how that happened last bear market and how you could have avoided basically losing more money. That is quite a good signal.
All right. Thanks, Michael. Maybe right now the fear and greed index is at 74, which shows a strong optimism among traders and investors despite some recent market dips. So this is a notable change from July 2021 when the index was more neutral at 51 during a similar market situation. Can you explain why it's important to understand these shifts in market sentiment? Also, what does this significant change in sentiment tell us about investor confidence now compared to back then? Uh,
I can take
Jerry?
that as well because I have, and then I give it to Jerry because I have an opinion on this you might not expect. So, when people see the fear and greed, they think, "Oh my God, we're greedy," and that will always lead to a crash or like a correction. And that is a lot of times correct. Like that will happen many times. But if you check actually, the fear and greed against the Bitcoin price, Bitcoin USD price over time, you will see that in the full bull market, we are greedy as hell for many, many months, and there is no correction. So yes, usually greedy or extreme greed will lead to a drop, but not in the full bull, and that is something that is quite interesting. And so I'm always keeping an eye on it to see, okay, are we now in the full bull? So I'm using additional indicators on top of the fear and greed, because fear and greed alone is just too fuzzy to say, okay, is the greed, can we ignore the greed now, right? Because we have other indicators telling us that we are in the full bull, so we're good, right? Because if not, then the correction otherwise will happen, right? So this is what happened also recently, by the way.
And Jerry, what do you think about that?
I I think I agree with Michael to a point where I think the fear and greed it's I would say it's a pretty solid indicator up to a point, right? I mean, different indicator represent different things, and I think for fear and greed indicator, it's people's perspective relatively like for their future perspective at the current time, right? So at least that's how I interpret it. I would say you cannot really ignore that, but I don't think that's something. Well, again, some people might disagree with me, but I don't fully take that into my investment or trading behaviors because nobody can predict the future, right? But that gives us like sort of the optimism level in terms of the market trend down the road, right? So and also like if you look at the indicator, you always have to look at during the current month or the upcoming months, is there any major events, right? Is there any major lawsuits, regardless, or as major decisions from the industry, right? So all of those indicators or factors that needs to be cohesively looked upon when making decisions, right? So like again, I agree with Michael for his interpretations, but I would be a little more I would say comprehensive in a way that indicator is one thing, but also market news, major decisions also play a pretty important role.
Mm. Uh, Thank you, Jerry. Ether, do you have anything to add?
I think quite similar with Michael and Jerry, but one point from my side is I don't simply take also that index as, okay, I'm going to short or long or hold it forever or sell everything, because sometimes I'm a swing trader. So that kind of index, which means to me is, okay, the market is kind of positive, but it also means higher volatility will happen in short term because the emotion driven the market in short term. So that will be making some decision for me to for my entry price and just check about the entry point.
All
I want to
right.
add something to that, if I may.
Sure.
Because I think it's like one thing that I took for granted when I gave my answer, and I didn't realize that the viewers might not take the same thing for granted. So usually when there is too much greed, then there is a correction so that the greed is flushed out of the chart, of the system, right? So that is why fear and greed is interesting, because if there is too much fear, if there is too much greed, people are leveraging and putting too much risk, basically, and they get punished, right? So that's why it's usually expected that too much greed leads to a correction and too much fear leads to a pump, right? So that's just for context if somebody doesn't know that.
Thanks, Michael, for the clarification. All right, Jerry, you mentioned about events taking more notice of market news. So, given the latest developments, such as the introduction of the Ethereum spot ETF and the recent Bitcoin conference, how should investors position themselves to take advantage of these shifts in the regulatory and investment landscape for cryptocurrencies?
Yeah, I guess I'll take this one for now, and I'll pass it. I'll let Michael or Ether to elaborate. I think we are in I'll say I wouldn't use the word turning point. I'll say a very crucial. We're in a very crucial and yet very interesting time for this industry, right? After the Bitcoin ETF approvals, we're seeing a lot more momentum, right? Either it's from institutions, or from regular, from compliance, from regulations. You see a lot of movement in terms of flowing into this industry, and you usually don't see that, from the past years. And also, like the Bitcoin conference, it's so interesting, is that you see, I think it's the first time in history that you see a past president of United States that joined the conference, right? Which I know that he's there for votes. He's there for, I'm not going to comment too much on the intention, right? But I think that marks a pretty significant milestone for the industry. And short term wise, I think it will lead to maybe a lot of speculations, but I think long term wise, it's definitely a positive, I would say, stepping stone, right? A positive thing for the industry, and which really give us a lot of confidence, especially when you are in this industry.
Agree, Jerry. Thank you. Does anyone have anything else to add before we move on?
Yes. So the thing is that it's very bullish, right? Because you see so much positive momentum towards accepting, and I'm saying here Bitcoin specifically as a reserve asset. Even Cynthia Loomis said that on stage. Even Trump hinted towards that on stage. Didn't make a big fuss of it, but he said it. So yeah, it's historic for sure. But at the same time, you have, for some reason, you have the other candidate from the Democrats catching up in the poly markets, right? So you had 60% Trump, now you have 60-40, I think, or 60-39, whereas Kamala was at 15 before the conference. So it is very interesting, and so people are taking it bullish, right? Because what Trump is saying might actually come true, because he might actually become president. So that's one thing, but he might also be just saying whatever we want to hear, to make us vote for him. And at the same time, you have Kamala catching more votes for some, or more support. So what if she wins, right? Then not what Trump said will happen, but whatever she wants, which we don't really know what she wants, because she didn't say what her position is on this industry, right? So it is bullish, but it's not without the other side of the coin that I just mentioned.
All right. And, Ether, do you have something to add?
Yeah, just one more thing is it is quite interesting about how they decide, but also we can look into some data like after the ETF, right? We just see the net inflow or outflow from Bitcoin or just passed for Ethereum. So over the past week, I think a good observation is there are approximately like 500 million like net inflow through Bitcoin, but its outflow approximately to 100 million through Ethereum. So that's may lead to my different decision if I'm going to loan more Bitcoin or Ethereum, because that means the funds from TradFi from the US market.
All right. So, in light of the market's recent recovery, do you think that this is a time to capitalize on potential undervalued assets, or should investors remain cautious due to potential volatility? But do take note, guys, that this is not financial advice, and everything discussed here is purely for educational purposes.
Yeah, so I think that right now the market is quite skewed towards Bitcoin and maybe Ethereum. We will see. The ETF didn't yet yield great results for now. We can talk about the Ethereum ETF at some point at the end, maybe, but I'm not the biggest fan of that ETF, but the Bitcoin one is quite interesting. And I think most of the funds, and also if you look at the Bitcoin dominance chart, which I can share with you later, is quite bullish, right? So it's pretty obvious that Bitcoin is the strongest asset right now, also because the doors have been opened for basically everyone in the US to buy this stuff, right? So it's pretty good. Whereas all the other assets, they don't yet have an ETF, right? So it's not like institutions can simply move between Bitcoin and Solana, for example, right? Or Matic or whatever have you, right? So that is why if money comes into the Bitcoin ETF, it is in the traditional finance system, right? It's not on chain or something. It's not on Bybit, sadly, well, it would be cool. So they can't easily move it, from Bitcoin to altcoin, right? So that is why I think this cycle might be very strongly focused on Bitcoin, because Bitcoin has this ETF and, it's a very easy to understand value proposition, right, for the assets, right? So this is a bit different than in the last cycle where you had Bitcoin gains and you could easily move them from Bitcoin to altcoins because you were on the same exchange and you could simply buy other things, right? Whereas now the money is on the traditional finance rails and it's not easily moving into those assets, right? So that's why I think that's the focus.
Okay. And what advice would you give to crypto newcomers who are preparing for potential future market fluctuations? And for our crypto veterans who have experienced ups and downs, what strategies would you recommend they consider to optimize their positions during these recovering market conditions?
Well, I think so. I have tried a lot of stuff, and I think for most people, especially if they're not very, very good at trading, or let's say they don't have time for watching the charts constantly and the news and what have you, I think following a trend is the best approach in my opinion. And so there are strategies and that's what I do, right? Even though I know I could be trading a lot and everything, but it's simply not my style. So I figured out having a strategy that follows a trend and then gets out before the trend, when the trend is looking like it's becoming weak, which you can do with indicators or mathematics. I have developed my own strategies to detect it for me. You might see that later on the chart when I show it. But so that is something that I think works best for like the mass amount of people, because they are retail, they don't have time, they are busy at work, vacation, whatever, you know what I'm saying. So for those people, it's good. It's not trading a lot, but it is following the trend and taking advantage, of these larger moves, even if there are corrections in between. Those corrections will be ignored, of course, because the trend is still strong and it goes up, right? But then when it falls, it tries to weaken, then you get out. You can even automate it, by the way. That's what I also do. I don't really trade manually at all. It's fully automatic. So that is what I think most people should be doing. That's why I have my YouTube about it. That's my topic, right? It's trend following strategies, fully automated. And in my case, it's actually on Bybit because you guys have cool features for this stuff. It makes my life very easy with the sub accounts, and I recommend that particular feature for this type of thing. So that is what I do. Okay. And so I'm not trying to go banana. So that's what I also recommend, not financial advice, of course, do your research, but to most people to look into, to get a bit educated on this. And for that, you can watch my YouTube channel and you find a lot of videos about this topic.
Thanks, Michael. I'm sure that everyone is very excited to learn more about your trend following strategies. Like you said, maybe you could just do a demonstration in the next segment. What about you, Jerry and Ether? What is one tip that you live by when it comes to optimizing your positions?
I'm not I think I'm not even close to where Michael is. Unfortunately, I'm a terrible trader in terms of direction, and I admit that with my full sincere heart. Right. Whenever I took a directional bet, I usually 90% of my from my past experience, 90% of my portfolio is gone. Right. So for me, I've been in this industry for a while. Right. Taking directional bets from simply for me, and again, it might work for somebody, it might not. Taking directional bet for me doesn't work for me, at least, right? So I took a different angle. I look at how volatile the market is instead of how simply betting on directions, right? I think if you're new to this industry, I think the easiest strategy, again, not financial advice, but the easiest, I would say, entering point is just to buy and hold some mainstream tokens, right? Like you get in, you buy some mainstream token, you hold it, right? It doesn't matter if it pumps down, your coin is still there. But if you are more seasoned traders, but you are not a automated coder or you're not a programmer, I probably there is something that we can discuss in the next segment where we have sort of volatility related product that you can give it a try. When the volatility is high, it probably will go down, but when the market volatility is low, things will pick up again, right? But again, so taking directional bets again doesn't work for me. But capitalizing on some of the volatility parameters might be something. If you're a little more advanced, that might be something that's worth a try.
Thanks, Jerry. What about you, Ether?
Well, in short, I think can be summarized in invest in large cap and trade within the alts. But just especially somebody you think you are good at trading, because trade, especially for those with large volatility with altcoins, may cause you like lose all your money. But invest, yeah, that's what like Michael's telling, right? You are grabbing the right trend for a long trend, not a very short term, 1 day, 7 day. It's about maybe a half year, 1 year, 3 year. That's an investment. So invest in the large cap like Bitcoin, Ethereum, and sometimes maybe Solana. Yeah, for newbies. I think that's all.
Yeah, thanks,
Yeah, I
Ether.
agree with Ether. And I want to say huge kudos to Jerry for being so honest, sharing your failures as well, because we all had, like, I failed for many years, by the way, before I started actually making money. And so I really respect Jerry for, just publicly sharing that you're a bad trader and working at Bybit. I love it.
All right. No, thank you guys for those invaluable insights. Understanding these factors gives us a clearer view of the landscape we're navigating. So everyone, do remember to participate in our pop quiz if you would like to win 100% APR boosters. And don't forget to leave your questions in the chat box. All right. So now let's take a look at what some of you guys are saying. So someone actually asked, what's your biggest concern about the current market? Anyone would like to start first? Michael?
Yeah. So the biggest concern, like, it's quite bullish, honestly, right now. Again, I have so much to show you still in this stream, so stick around. The biggest concern is simply, can I say? I mean, so World War III. I mean, sorry, but it's like, it's a big concern, right? So, I mean, it can happen. I don't think it will happen, right? Don't get me wrong, but it is, like, it could happen. So there is some probability that is very low. Europeans are not doing the right thing, I think, to get peace happening. So that's a problem. But just looking at, another thing that is more probable and still pretty bad for the crypto market is that Trump is actually assassinated successfully. I'm just saying, okay, don't shoot the messenger. No pun intended. So because that will actually destroy all of the good stuff he was saying at the conference, that would be ultra bad, okay? But other than that, there is another small thing which is almost over, is the Mt. Gox selling, right? Which is almost over. I don't think it might have a big effect anymore. I mean, that's my opinion. I think we can disregard that. So other than that, which has quite low probability, like I said, there is nothing that really concerns me about this market. I mean, sure, you have the large caps which are doing their best to capture, the newest trends, which I saw another question from the audience, quite good question about the trends of the cycle and stuff. So capturing those trends. But you have meme coins, which are fun. I love it, but nothing that is really what I see. There would be something to take care of. I think we are on a train up, basically. Yeah, trend wise.
So talking about that, do you think that the market correction now is the start of a long-term climb based on the trend?
Yeah, I mean, this correction was just because of this correction was just like selling of Germany selling and, Mt. Gox and repayments, right? Those people have made a 10x, sometimes even 100x, depends. when they got in. So that was the only thing, right? So basically, it was a correction that could have been bought to get good entries. That was not really the start of the bear market. This is just something that for people who have seen at least one cycle or more, for them this was just nothing really. It's just a buying opportunity really. So yes, I think now we are very close, not exactly, but very, very close to the next massive leg up for Bitcoin, and the other stuff, the altcoins will follow, I guess. I mean, that's what usually happens. But like I said before, the money cannot simply move from Bitcoin to the altcoins as easily it was before. So we need retail to join in the party, and retail didn't yet join in. Okay, you can also see that on the Google search trends. It's not yet there, which is good, because if you're already in the market now, or you position yourself correctly, you can be ahead of the most people, right? Which they will come in later, like always, right? So it's a great time. It's a really great time to be educating yourself and creating some positions, I think.
Ether, what do you think?
Yeah, in my perspective, because I've been to this industry for also 5 years, and my concern is, I think for this round, it's not that much new stories in the industry. That's something I'm concerning. For last round, yes, the Fed cut their rates. It's a initiate. The funds are just injecting to the industry. But then we see like all different kinds of DeFi, NFT, NFT DeFi, and games, something like that. But this round, I think the story is not enough. So on the crypto end, I think we need like better story and better new tech, better applications also. So which can lead the market not only driven by the macroeconomy, but also can driven by some internal stuff alone. Yeah, that's my concern.
So you're talking about more innovations in the space. Is that right?
Yeah, that's true.
Thanks, Ether. What about you, Jerry?
Yeah, pretty similar, right? This round, first of all, very agree to what Michael just mentioned, and also from Ether's point, I just want to add on a few. Right, you don't see a lot of innovations for sure. This round, let's say last year, this year, what do you see? You see inscriptions on Bitcoins. You see inscriptions on some other stuff, right? But you really don't see a brand new sector comes out, right? You see staking on Bitcoins, you see like having restakings, you have, and those are, well, you could potentially call them innovations. They are, but they're not really, right? So and as you see more and more inflows from institutions, from from whales, from TradFi's, you see the market is getting bigger but smaller, right? Right. Bigger in a way is from a volume perspective, but smaller in a way is that there are a more focused asset class that's been, people have to keep their eye on it, right? I honestly, I'm personally very bullish in terms of this industry long-term wise. I think this industry is going to change a lot of different industries, going to change a lot of lives, right? It even potentially will change how we spend money, how we accumulate wealth, right? So short-term wise, I think it's just, we got to be very, very patient, right? We got to be not only patient with the industry, we got to be patient with our bag as well, right? Just don't play around with it too often when you don't have a clear idea of what to do, right? So I guess, yeah, that's my 2 cents.
All right. Thanks, guys. And thank you to you, audience, for your engaging questions. Please keep the questions coming. I also saw some comments. Some people actually said, great, please do this more often. We'll take that feedback. Right. And now let's pivot to our second segment on trading strategies during times of volatility. So while understanding market dips is crucial, it's equally important to know how to leverage periods of recovery. This segment will focus on making strategic decisions that not only safeguard your investments, but also position you for potential gains as the market gains stability. Let's explore actionable strategies that you can implement to capitalize on these improving conditions. So, market volatility often presents challenges even for seasoned crypto veterans. Like Michael has mentioned. So can you share some of the common mistakes made during these periods of fluctuation and offer some practical advice for both experienced traders and newcomers on how to navigate these cycles more successfully?
Yeah, sure. I'm glad to add something there because you know, I want to address basically always the bigger audience, right? So the bigger audience usually is not, hardcore trader education or educated in trading, or being professional, right? So most people they love the market, they want to be part of the market, but they don't know what they should know, in my opinion, to make it happen. So in that case, most people will potentially go to the make money fast route or using hodling as a strategy or using DCA as a strategy, right? And I want to talk about this, and then I want to go to something much better that they could be doing, right? Because I have actually a video on YouTube, and I really recommend. I don't know how to link it now to everyone, but it's a video about why DCA and hodling are the worst strategies for crypto on the planet. Okay. And now I could explain, I will explain, but in the video, I actually show you why. Okay. And so what most people are not looking at is when they play these markets, because they are getting excited, right? Like, oh, we got bullish, wow, let's go. So they might actually find good entries, but then they forget to get out of the market, right? And so hodling and DCA would destroy your portfolio in that case completely. So if you do it in Bitcoin, you might survive because it comes back. It always comes back so far, right? So far it always recovered somehow, right? But in the time where you're in that market, so your portfolio is suffering. So if you see your portfolio as a human being or a baby or something, it is very happy when it goes up, but then you hodl, it goes down 70%. It is crying, right? It needs you to take care of it. Yeah, it's not good, right? You wouldn't want your baby to cry. Okay, so you are actually letting your baby cry for 1 year or 2 years until finally the trend comes back and then your baby starts being happy again. But why would you let your baby cry for 2 years until the freaking bear market is over? You can also just sell and wait it out or do other things with your money. And this is what I call portfolio equity management, right? Where you basically, instead of just looking at the price of Bitcoin, you also look at imagine you have your portfolio as a chart, as a line, and how much is your net worth or your portfolio worth in dollars, right? In dollars, because it's easier to talk about it. And so if your portfolio goes, like, let's start here. If your portfolio goes up, 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 and, like a staircase, then it's good, right? Because you make money, you get out. You make money, you get out. You make money, you get out. So you have more money every time. It's nice. So you have a bit fluctuations, but it's fine. But if your portfolio goes like this, that is not good. Okay. And so people don't have this kind of education because nobody tells them, right? It's all about making money quickly and everything and hodling and so on. But if you hodl, then your portfolio does exactly this, right? Whatever the Bitcoin does, it's pretty bad. And if you DCA, the problem is you buy all the time, but then when the market crashes, your portfolio is not in a good shape because instead of doing this, it does a bit less of that, but still it goes down dramatically. It goes up, it goes down dramatically. So it's better than hodling because we're talking about strategies, right? But it's still not good, right? Because it will feel like a roller coaster still, right? It will still feel like a roller coaster, but your portfolio should not feel like that. It should be smooth, And so that is what I'm trying to achieve and what I do actually achieve with the trend following strategies that I'm using, which is what I told you about. Imagine a staircase and it's simply just going up and stabilizing, and that's it, right? And so never going back down, never to the previous step of the staircase, right? So that is why most people don't have this education. That's why I come on this stream to also opens people's mind basically to educate themselves on this topic. And so if you talk about strategies, to wrap it up, DCA and HODL are super bad, okay? In comparison to what you could be doing, that is very easy and has dramatically better risk management and profit, right? So that's my starting words on this segment, yeah.
Thank you, Michael. That was a very cute analogy. I've also watched your video actually, and guys, it's really very informative. So definitely check that out. And of course, if you stay on to the end of the stream, Michael will also be doing some demonstrations. So stick around for the alpha. All right. So considering the current importance of market sentiment, how can traders utilize sentiment analysis and volume trends to understand the prevailing market conditions effectively? Jerry, would you like to share first?
I might not be, perfect. I might not give a perfect answer for this, but let me try. Because I do not do a lot of, market analysis, right? Um, I'm actually, based on, Michael's analogy, my baby was crying for quite some time, right? And my baby just stopped crying very recently because the Bitcoin's price was starting to pick up again, right? Because I did accumulate a little bit of Bitcoins, throughout many different months and years. Where I don't mind sharing. I was actually buying Bitcoins at above 65K in the last, well, not last cycle, when Bitcoin was on a rally, right? And when it dips, I actually bought a few. I actually bought a little more, right? But again, it dips further, right? So based on the analogy, I was kind of the DCA and hodler, that types of strategy. But again, I think based on the volume trend, and the prevailing market condition, I think you just got to do what's fits you the best, right? Yeah, my baby was crying for 2 years. Sorry, for even maybe longer than 2 years, but I think I'm gonna stick with it. I actually have a slightly different perspective on the hodling and DCA. But again, I'll leave it up in the comment section, or to either or Michael to elaborate a little more.
All right. What about you, Ether?
Yeah, I think glad to hear more about Michael. But what a typical strategy, I use indicators sometimes, but for mid trend, I use stochastic RSI and Bollinger Bands. These two things are my favorite because I believe oscillating. Although I know there will be trends, but I wish to decide like when I should entry. So a typical strategy on my side is for the latest recent one, I think a few 2 or 3 weeks ago, there is a large dip, right, for both Bitcoin and Ethereum. I think it's at the beginning of July. Yeah. After that, I just built my position on the right side because I see for those stochastic RSI, the recent one just moving larger than its moving average one. And that's the recent time I just place my orders and place my long orders or new positioning. But actually, I'm not that a very frequent trader, so I'm willing to learn more from Michael's side.
All right, now the stage is yours, Michael. Well, what do you think?
Yeah, so I think there is one more thing that that I will add, okay, to hopefully add, like, because trading is, or making money in the crypto markets is just a means to an end, right? So it's not about just making money, but what do you do with that money, right? Because it has a purpose in your life, right? So what I think that is also very important, and you learn maybe that automatically, or you learn it by just making the mistake, which is what I did. I made all the mistakes possible. Is, for example, in the bear market, if you have money while everyone else, because most people lose money, right? While everyone else does not have money, you can go and buy stuff. So that is why hodling is not so awesome, because if you keep your money, you can go buy apartments, you can buy watches, and whatever, because those things usually fall in price, or you get good deals, because prices have to fall because most people don't have money, but you have money, right? Because you didn't give it back while hodling. You see what I mean? So if you just look at it from the point of view of, yeah, I will hodl, it's fine. Yeah, sure. But how does it affect your life? your portfolio, your actual life. Okay. So if you put that into the mix, you might better understand why I don't like hodling, because you got, instead of having the funds to do some good thing with that, you just gave it away, right? So, and even if it will recover, it's yeah. So mathematically, because I'm a tech guy, right? Mathematically, it's just it's not the best strategy, yeah. And so this is, and I think that most it's very, like, if you grow up in the, or you go into crypto Twitter and stuff, you might hear it, you might get like that this is a good approach because you're part of a cult and you're part of this movement and it's cool. And so it takes a little bit of maybe 2 of my videos to actually get out of that and understand why you can do better and how you know. So that's I try to explain to people not only how to make money, but then also why it's good to protect your purchasing power, which is an important aspect of all of this. So yeah, whatever. Yeah. So I try to make it easy by automating. So just wanted to add that into the mix. If you have money while everyone else doesn't have money, you can buy stuff cheap and assets, and that is mega important if you think about it.
Thanks, Michael. All right, so just taking a quick look at the chat box. So people are saying, so if not HODL or DCA, what tools should we use? I think maybe, Michael, would you like to just share your screen and just walk us through your trend following strategies?
Okay. Absolutely. I love to do that.
Thank you.
So let's see if it works fine. You can see my screen.
Yep.
This is the Bitcoin chart. I will hide a few things and I will show you those things later. So, sneak peek. So basically, if you see the Bitcoin chart here, you can already kind of see this strategy here. So you see these blue arrows and the pink arrows, and I will zoom in, but just so you understand, these are the buying and selling signals, right? So it was buying here and it was selling up there, right? So fully automatically. And so those are trend following strategies, which take a long time to play out. So it's fully boring. I fully understand that you have to wait and not do anything. And that is what it makes hard to run this kind of strategy, mentally hard, but technically easy, right? So these are 194 days of the long position being open, and it made 350% profit. So this is all you need to do basically, and then just get out before the downtrend is happening. So the sell signal was up here, or the next, we had another pump up, right? We had this double top really. So the sell signal was here and protected from a lot of losses. There was a losing trade here, but then protected from another 60% losses. So what I do, right, is I just use strategies that I learn to trust. I mean, honestly, you can imagine that I develop my own strategies because I'm an engineer and I just put in the work, to create my own. But overall, there are strategies on the internet which are also free that do similar thing. They don't have the same performance, but it doesn't matter. The idea is to simply be better than DCA and hodling, right? And that is good for most people. And then if you want to be actually trading actively, then you can do even better, right? But then you really need to put a lot of time into this, right? So those are the things that I see. And so I think people watching this, with very little effort, using a trend following strategy, they can get to amazing results, right? When I say amazing results, I mean, basically, if you look at this strategy, it made, since this trade here, made 2,700% profit without doing anything. It's fully automatic. So this is what I'm talking about. And this is what I think people should educate themselves towards.
I can see Jerry is very amazed. I'm sure
Yeah, you could do more. Like, listen, I know people, they made more money, but they put in, really see, like they had to work and put in a lot of hours. And so that is absolutely possible. But I'm happy with 2,700% profit while my portfolio is actually stable, right? And not going crazy. Actually, let me show you, because this is something that most people don't ever see anywhere because it's hard to see. Let me clean up the chart a little bit. It's a bit too much action here. Okay. So this is the same strategy, but the only difference is that I added to the code this blue line. The blue line is your portfolio value, is the money that you have, right? It's like, yeah. And this line is something that you don't see anywhere. I don't know why. I think you need to have some coding skills to add it. But if you look at the line, then you know what I'm talking about. And I want to show you the hodl and this strategy just to see the extreme two examples if I'm allowed to do that. Is that okay?
Yeah.
Okay. So actually, let me also turn off the Bitcoin halvings because we don't need that. Okay. So as you can see here, the blue line, it was here fully flat because there was no buy signal. It didn't do anything. So it started here with this amount of money, whatever amount of money that is, it doesn't matter. It's only about the percentage gain, right? So here was a buy signal. So the portfolio started to take risk. So in this case, it moved up because it's a long only strategy. It moved up, it made some money, and it found a new plateau, right? Like this staircase, right? Because here was a sell signal and like another trade with little profit, but really found a new high, right? The portfolio. So it went from this amount of money to this amount of money, and it stayed there, right? It was staying there while Bitcoin was crashing 40%, 60% in the COVID dump, but portfolio was fine, right? So I could take that money anytime and do something with it, right? That's important. Then some useless movement here, which I think we are exactly here in this kind of phase right now, by the way. And then came the actual buy signal for making most of the gains, right? Because that was the real bull market, the full bull. And here again, the strategy bought, went up, created a new high on the portfolio, right? So the portfolio now went from here to here, right? And now you can see with your own eyes that when Bitcoin crashed 75%, the portfolio didn't care almost at all. Of course, the portfolio lost here like 16, 15%, which is exactly the drawdown of the strategy, by the way, here, right? And that's it, right? So that's it. You don't have to do more than that. Okay, just follow the trend, get out before it goes down. So this type of strategy protects your money. Now, in this time where I said the baby was crying for most people, my baby was not crying. I don't have a baby, yes, but it was not crying. I could just take the money and buy a house or something, which I actually did because I had it available. I could just take it and do something with it. And so that is something that I want to educate people to see it with this perspective, not just seeing it from making money in the bull market, but also having money while the bear market is happening. And then, of course, the bull market started again and the portfolio went further up, but we still expect more gains and so on. And if I draw the line, then you can see that this is really a staircase, like a staircase, no? And you never fall back down. You never fall back down where you came from, okay? You should not, right? That is the idea. So that is this strategy, right? Now, if I may, I will go to the hodl strategy because I created a hodl strategy here so that I can show it on the chart the same way, right? So hodl strategy also starting from 2018, which my strategy also started, but doesn't really matter how much money it made. It's really about, you see the portfolio, it's the blue line. There is no protection, right? So, I mean, your portfolio doesn't do a nice staircase. Instead, it goes down and you're fully wrecked, and then you know what I mean, right? So it's just bad, okay? And so here you don't have money in the bear market. You do not, right? You see what I mean? So this is bad. Okay, then DCA, I also have one for DCA. I mean, DCA is crazy because it looks pretty bad because you're adding money to losing trades here. That's why it looks like this. So I have to zoom in a bit differently because you always add, right? Every week, or in this case, it's every week. It adds money, right? Doesn't matter what. So that's why you can be very negative a couple of months or something, right? During that time. So you see here also your portfolio blue line. It looks pretty weird, I know, but the blue line is also all over the place. It's not protecting you from losing purchasing power. You see, so if you see it with this with this perspective, with this lens, then I hope you understand why I like this approach. Because it just protects me better than the other strategies that I've been experimenting with. Right? What do you guys think?
Yeah, I think super cool, Michael. But one thing I wish to add on for DCA, the strategy itself, actually is because you are a professional one. I think people need such mentor like you to configure whether it is the bottom, right? So we should invest in, and whether it's the upper higher, and that need a lot of rational, and they have to be disciplined, right? When we think it's at the top, we have to sell them more. We have to sell them more and keep it flat. But I think in the real cases, most people, when it is in the top, they are not willing to sell anything.
They are very bullish. Yeah, they don't want to sell. Yeah.
Yeah, that's a
No, I fully
key
agree.
question from them.
I fully agree, but keep in mind that this strategy is fully automatic. Okay, these buy and sell signals, they are not put there by me, right? They are put there by mathematics, by the logic of this strategy. So it will sell, right? It will sell. If you do what I do, then you connect. So what I do, okay? I use. Let me show you because it's maybe you care about this. So I connect this strategy with, and I have to switch the tab I'm sharing. Let me do that now. Sorry for that. Yeah. So you connect the strategy that I showed you before. Maybe can you check if the screen is coming up? The new tab, I mean, yeah. So you take similar strategy, okay? Some strategy that has signals, right? Buy and sell signals, right? You connect it with a software called Signum. This is the easiest way to connect. You know, in this case, I connect TradingView with Bybit. Like I told you, I like to do that with Bybit, and then it sends the signal to the exchange, and it's just trading. Okay, so it is quite simple to do that. So you go TradingView strategy, Signum, Bybit, and I recommend Bybit because of the sub accounts. The sub accounts are basically very nice because, so I stopped sharing just so you know, is because you can actually create a bot for each coin, and then they are just nicely separated from each other, right? So you don't have some kind of overlap where one bot takes the money from the other. And so I tried all the exchanges that are, you know, trustworthy, honestly, not all, but all the trustworthy ones. And you guys have the easiest way to do this stuff. Okay. To be honest, like you have a nice way to manage your sub accounts. You can you can even put limits on which coins are allowed to be traded on that sub account so that the trade automation will never, you know, by accident trade something else. It's nice. I love it. Right. And so Signum is also supported, by the way. You can drop down, connect with that thing with Bybit. It's quite nice. And so that's why when people come to me and say, hey, I want to do what you do, listen, it sounds logical to me, or, you know, I want to do the same. So the setup is very simple, especially with Bybit. It's very easy. And I've seen people trying it with other exchanges, and they said, screw it, I go to Bybit. It's fine, right? And so this is how, you know, that's why I like you guys, because you make my life easy, right? So honestly speaking, so I'm an engineer, I want life to be easy. So yeah, people do not need to be mega smart about this, because they can just take the strategy, automate it, connect it to Bybit, and that's it. So it's not a lot of work, honestly, just maybe 1 or 2 hours in the beginning, and then it's automatic, right?
Thank you, Michael, for the detailed analysis. Everyone is raving about how this is so educational. And of course, thank you for the compliments as well. So yes, let's just quickly move on to the next segment. So, you know, as the crypto market shows signs of recovery, it's an opportune time to explore not just active trading, but also stable investment strategies. So many investors are turning to passive income options to bolster their portfolios during these periods of market stabilization. So in this segment, we'll dive into how Bybit structured products and Bybit savings can play a crucial role in these times. So yeah, maybe Ether, would you like to just quickly break down the concept of structured products and how illustrate how these can serve as a hedge or profit opportunity for crypto investors during market volatility?
Yeah, I think Jerry will be more suitable for structured products, but I will briefly just introduce something about the earn. So in the case, if you are no longer a trader, if you just wish to earn passive income, no trading risk, just try for, I think Jerry will make a demo for that also. Use just a Bybit saving, either for the fixed or the flexible ones, because it is not the interest and the yield is not coming from trading itself. It's from the demands of, you know, some people are just borrowing the interest rate they paid, and we make, you know, the whole collateralized system. So it's not a trading system. But for structural products, I think, Jerry, you can make more demo about it. It's something related to tradings, but it's not that trading. It's more passive and more automatically.
All right, sure. Jerry, would you like to share more? Oh,
Can you hear me?
Oh, Jerry, here's back.
Yeah.
Perfect.
You're good.
Sorry, I was having a little network issue. So I'm assuming we're talking about structured product, right? So I think structured product. I think among all the earn products, structured product are actually what I think is with the most sophistications and complexity, because actually structured product are derivative and option based, right? But the beauty of structured product is we don't let traders or whoever who want to grow their portfolio to really understand option trading, because option trading can be really really difficult, right? So what we do here at Bybit is to visualize, or to just simply put those strategies in a diagram, right? And to give a full visualization of what's going to be the payoff, or what's going to be the results in terms of different market scenarios, right? And here at Bybit, we have four structured products. Unfortunately, I'm not going to share my screen, but we have four structured products. We have two structured product that is actually when you think the market volatility is going to go down, right? So you don't have to worry about directions. You only have to care about, you think, oh, okay, the market volatility is already pretty high, and you want to actually short volatility. And we have dual asset and discount buy. That's actually helping you to do that. And on the other side, I think this is Bybit, its first in its kind in the market, where we have structured product that is actually longing volatility, right? And that is double wing and smart leverage. Especially, I got this question a lot from people, is that, hey, Jerry, I think the market is going to experience a very, very high volatility tonight due to Fed's interest rate cuts, or due to different market events. It can be either going really, really high, or going really, really, really low, right? It can be a huge rally, or it's going to be a huge dump, but I don't know which direction, right? So I got this question a lot. But here at Bybit, we actually have a product that's called Double Wing, that actually you don't have to worry about direction at all, right? It either goes up or goes down. You can actually profit from the market volatility, right? So I think if you are sort of trading on the volatility, you can definitely go try it out on our Bybit structured product, where you can navigate different product. But if you are just simply want to capitalizing some stable returns, you want to be 100% principal protected, we also have the tailored product. Either you can go into flexible savings, where you put your money in, it's just going to go into a big borrow and lending pool. You'll earn your interest from whoever borrows it. Or if you're a VIP, you hold a large amount of USDTs or Bitcoins. You just simply don't want to see it. You simply want to hold it, gain some stable yields. We also have a sector dedicated for VIP called wealth management, right? So you just put your money there. We're going to manage it for you in a very low risk or little risk, or close to no risk strategy that's going to generate stable incomes, right? So do feel free to check them out. Yeah.
Yeah, and Jerry, I'm sure you will also agree that we definitely have a range of products that caters to everyone with different needs depending on their risk profile as well. So yeah, guys, definitely check that out. And thank you to our panelists for your strategies, and thank you for just simply breaking down Bybit structured products and Bybit savings. We hope you've gained a better understanding of some passive income options at Bybit that you can choose to use to navigate the crypto market. So we've covered a lot today, and let's just quickly take a look at some of the audience's questions before we end off. So someone actually asked how to stay calm during a drawdown. Michael, would you like to take that one?
Yeah, I saw that also it's great questions in general. Really love the audience. It seems they are super excited about this. I think so. You might expect my answer, or you might not, but if you have a strategy that you trust, then you don't give too many, you don't care too much, okay? Because you have the strategy will take you out when it should be. Sometimes you will lose a little bit, but that's life, right? So if there is a drawdown in the bullish trend, and you are, let's say you have some indicator that tells you that that it's a bullish trend, right? Then you can just stay calm because you know that when the strategy is still invested, that you're good, right? So you can use the dips to actually, in the drawdown, to actually buy more, right? Because if strategy is still invested, then you could actually even increase the profits that you've seen on the screen by doing this kind of small additions to your portfolio. I'm not saying a lot of money, right? But you can buy the dips, right, during the uptrend. So that is, for me, it's not to get stressed during the drawdown, especially in a bullish trend. For me, it's more like to get excited, right, about this. So this is how I see it. So I stay calm by having a strategy, whichever strategy you have. You saw how I do it. You can have whatever strategy, but if you have one, it keeps you calm, right? Because you have thought about it, you have a plan, and it's not perfect, but the chances of, it's all about probabilities, right? It's about chances of succeeding. You not win all the time, right? So don't see it as 0-1 or something, right? Oh, there's a drawdown. Oh my God, right? So it's more like, how can I increase the chances of this playing out in my favor, you know? So yeah, so so I stay calm by having a strategy and by actually buying more during the dips with smaller amounts, of course, because yeah, during the uptrend. So that's for me actually quite exciting times, drawdowns, yeah.
Thanks, Michael. I think you would agree that it's great to actually also come up with like a trading plan as well as keep a trading journal, just so that you ensure that your emotions don't get in the way of your trading, right?
Yeah, I mean, you suggested emotions. I didn't mention that, but emotions are a big problem because they can get taken advantage of, and they are taken advantage of by the big money and the professional traders. And so, because every human has emotions, right? Every human has emotions. They and most humans, they don't train their emotions to be reduced while trading. That's why they get taken advantage of by the big players, right? So the chart is simply, the representation of that, right? So when you automate your buying and selling, or when I do that, I have zero emotions because it's fully automatic, okay? The only thing I have to do is not touch it, okay? That's right. And so automate, some kind of automation helps you to eliminate emotions as well, right? So keep in mind that as well.
Thanks, Michael. And one other question, what should we pay attention to when investing? Maybe you can give some tips.
I mean, when you say investing, I think, Jerry, yeah, but let's go to Jerry afterwards. I think you have to look at some fundamentals, right? Because when you say investing, it means for a bit longer time. And so you might look at something that you can hold for longer because you made your research and you figure out, okay, this is not going to go to zero very soon, as opposed to the extreme other side, which is maybe a meme coin. That is more like speculation, trading kind of thing. I'll just give the extreme example, yes. But there are also some normal projects, layer twos, layer ones, that might not make it. Okay, so you have to do your research when you do investing and make sure that you can hold it for a longer time. Yeah.
And Jerry, you had something to share as well?
Yeah, I think first of all, I really learned a lot from Michael's demo today, and 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 to be honest, I think there's a big difference between investing and trading, right? So in terms of investing, very 100% agreed on what Michael just mentioned, right? You got to do your own research. You got to be very patient, and I think you just don't get involved with your emotions, right? Because emotions do get the best of you if you don't, react well. For me, in terms of investing, I had my failures previously, but I also have made gains, right? I think I would say the number one rule is, don't put your all of your eggs in one basket in terms of asset class. This is number one. Number two is just be super, I would say, patient in terms of when you're making an investment decision. Number three is be very, very disciplined, right? Don't get emotionally swinged when you see some black swan events or stuff, right? So I would say those are the type of things that I will watch out.
And Ether?
Yeah, I think short to be short, from my side, from my experience, is make a plan. I think most people we are talking, too superior for most people, telling them, okay, yes, we are going to utilize some strategy, but some people, especially those newbie, the first thing come to their mind is what is your plan? The plan means, okay, how long are you going to invest for something, and how much of your portion are you going to? Are you going to accept you if you lose all of them? So a quick example will be, okay, if I get like 10K, maybe I will only spend at most maybe to my risk averse, I will spend only 100 for meme coins, and I will just care nothing about them if I lose all. But if I spend all of them in a meme coin, it is nonsense. I lose them all. So that's it. And also, I think this can answer the formal question about like how you deal with drawdown. The best thing is what Michael said, right? If you have a strategy, yes, you will not be afraid of it. But if you do not have it yet, you're just schedule a plan, manage your expectations, so you will not be too afraid of the drawdown. That's it.
Thanks, Ether. And one last question: how to best understand market signals? Michael, would you just like to take the last question?
Can you say again? I didn't hear the last part of the question. Sorry.
How to best understand market signals?
Okay. So I have quite controversial opinion on this because what is a signal and what is just like a noise, right? And so there are so many ways to do this, right? So what I will say now is not the only way, right? And that's the beauty of it, right? There are so many options to make money and to do your own thing and to come up with your plan that makes sense for you and works for you. But so, for example, you know, at some point when you do trading or investing, you figure out that you fall into a particular camp, right? You fall into the camp that cares about the news, and you and you fall into the other camp that only cares about the chart. Uh, right? So it happens, right? So you try to combine it, but then you do like one more than the other, right? And then you will just stick with that, what works for you. And so for me, because I'm an engineer and I like numbers, I like the chart, right? Like I look at the chart and I don't really care too much what happens in the news, although I do read it and I do have a YouTube channel talking about the news, but I always at the end of the video say, doesn't matter. I have a strategy. Who cares, right? Um, and if funny enough, if you open the chart now on your phone or something, you look at the Bitcoin candle when Trump was speaking, it was all over the place, right? This candle, right? He said fully bullish stuff, but in real time, it was actually going down.
Yeah.
So, like, why would I listen to the news even if it doesn't help me to make money? Like, I would have lost if I started trading that stuff. I would have been somehow very stressed and most likely leveraging it in the wrong direction and stuff like that. So I think market signals for me are purely from the chart. Looking at using indicators, combining several indicators. Just one indicator is not good enough, right? You have to combine several to then, if all of them say it's go time, then go right and buy. And that if you that works for me, right? That works for me. But then you have other people like Raoul Paul and all these people, and Michael Saylor, they don't care, right? They do macro analysis, and they are and that the reason also is that they have so much more money, right? They have billions. You cannot do what I do if you have, because you move the market. If you go just buy, when your signal comes, it's not, like if you have $1 million, it's fine. But if you have billions, it's not the way to do it, right? So also depends how much money you have, right? So for me, because I don't have enough, I don't have so much money as Raoul Paul has, right? I look at the chart. For me, the chart is the signal, and that's how and indicators and strategies, right? That's how I decide, and that's how I interpret what is going on. Even though I'm very bullish on everything we talked about before with Trump and regulations and whatever, rate cuts and everything, uh, they somehow seem to fake people into still making the wrong move, because the market is here not to make you money. Funny enough, the market is here to steal your money and give it to people who have a strategy and who know what they're doing. That's the truth, no? So that's why most people lose money, because they don't know what they're doing, and money goes to people who are prepared and they do this for a long time and they have us right. So see what I mean? Like, so for me, signals are in the chart only, because that is the truth. That is what actually where the money is, right? The money goes in, cool, I go in, right? The money doesn't go in, okay, I wait, right? So that is for me the most important signal that I use, right?
All right. Thank you, Michael. I'm sure a lot of us learned a lot from you today. Unfortunately, that's all the time we have. Thank you to our panelists, Michael, Ether, and Jerry, for sharing more insights on how to navigate the crypto market, and to our audience for your engaging questions. Michael, everyone loved the live trading demo. So we'll definitely have to have you back on one of our live streams someday. So yeah, please note that none of this is meant to be financial advice, and the topics discussed are purely for educational purposes. So thank you once again to our panelists and to you for joining today's insightful discussion. For more information, please visit our Bybit Learn website, and don't forget to connect with all of us on social media. We also have some exciting new projects that are coming up on Bybit, so definitely keep a lookout for that. Let us know what are some topics that you would like to hear more of, and we'll see you at our next live stream. So stay tuned. Thanks again, and see you.